Hello everyone, I'm Kiran Bisht and you're watching the first video of OnAccount Consultant in the series of tutorial that will help you know basic accounting terms. By watching our video, you will learn everything you need to know about accounts, starting from basic to advanced accounting. In this video, I will teach you what do you mean by transaction as well as what are the types of transaction that are recorded in books of account. So let's see. Transaction. Transaction in a simple word means the exchange of goods and services that take place between two or more people. An important business deal can be called as transaction. You can call any exchange, particularly involving buying or selling of goods and services with any other person, a transaction. There are transactions involving money, ideas, and even an email. Transactions are mainly of two types: monetary transaction and non-monetary transactions. The transaction which involves an exchange of money or money worth directly or indirectly are called as monetary transaction. Now, the question may arise to you, what is money or money worth? So, money is nothing but a currency that we use to buy or sell goods in our day-to-day life, whereas money worth means something that is recognized as equivalent to money. Examples are digital wallet that includes Paytm, cryptocurrency that includes Bitcoin, shares of the company like preference shares, equity shares, debentures, etc. In the books of account, only monetary transactions are recorded. They are also called as financial transactions. Monetary transactions are further divided into two types: cash transaction and credit transaction. To call a transaction a cash transaction, payment should be made or received immediately in cash. Many people get confused that credit card transaction is not a cash transaction, but actually it is. In books of accounts, there are two types of cash in hand and cash at bank. So, when a person swipes the card or does a e-transfer, you receive money immediately in your bank account, even though not in your hand. That is, you have a cash at your bank. Remember when I explained money or money worth? Same applies here. When cash is not paid or received immediately at a time of transaction, but it is paid or received in part or whole amount at a later date, it is called as credit transaction. Let us take an example to understand better what is cash transaction and credit transaction. Suppose you sold a good to Rahul costing rupees 10,000 and Rahul paid you 10,000 to receive the good. Then this is a cash transaction in your book of accounts and you will record as goods sold for cash at 10,000. Whereas if Mr. Rahul did not pay you 10,000 and has taken goods, then this is a credit transaction in your books of account where you will record as goods sold on credit to Rahul at 10,000. In the above case, if he has made the part payment like 2,000, then still the transaction would be a credit transaction for the amount not received, that is 8,000. So the 2,000 will be received as an advance or down payment, will record as cash, whereas 8,000 would be recorded as credit transaction. Transaction which does not require money to buy or sell things are called as non-monetary transaction. Such transactions are not recorded in books of accounts. They are also called as barter transaction, as there is an exchange of one thing against another thing. So I hope by now you would have become familiar with transaction and its type. In my upcoming video, you will learn more about other accounting terms used in business and books of account. So kindly subscribe my channel and don't forget to hit the bell icon. Thank you for watching my video.